Hi everyone. Hey Sandy, how are you?
I'm good. How are you?
Good. So
Good.
today we're talking about the market analysis, which I think is always fun to hear about what's going on in the market and especially getting your point of view and seeing how each other think the market's going.
Yeah, for sure. What are you seeing?
Um, so I saw things starting to pick up a bit more, specifically on our side where it's like the wholesales and stuff. Like it seems like a lot more people are trying to sell houses now more. So I've been seeing that happening a lot more in the
Really,
last
eh?
couple months.
Yeah, so people wanting to sell them in a hurry.
Yeah, in a hurry or just privately.
Yeah. I wonder why that is. What's your take on that?
Um, I don't know actually, because like that beginning of the year, I think what happened was the beginning of the year people like wholesale dealers were actually selling a lot higher than even things on MLS. Like people were a lot more in the private side. And
Yeah.
then all of a sudden, maybe in March, things just kind of not disappeared, but it became like I wasn't bombarded with so many emails to say
Yeah,
about
yeah.
like how's this
Interesting.
going. And
Yeah.
then all of a sudden, yeah, these last couple months, things are picking up a lot more now, and at least on the private side, we're seeing a lot more sales happen. I don't know why. Maybe my guess is because like they're seeing things are improving and people are more open to sell maybe, and they're trying out the private side to see if it's worth it for them.
Could be, yeah. And I think some of it might just be pent up sellers. Like I think there was a lot of people who didn't want to have their house on the market because they didn't want people coming through. And now that things are starting to open up, I think they're maybe a little bit more comfortable now
Yeah.
selling. Because really, we've had such low inventory for so long
Yeah.
that at some point that's going to break, right? So that probably could be why as well. I think maybe that's part of it. What That's a good sign because we are seeing that as well in the real estate market, in the resale side as well, right? In
Hmm.
the yeah, on the MLS, we're seeing a little bit more listings and stuff. So it's interesting. Yeah, but that's great. So I think I know I've been watching the Toronto condo market, which is really starting to pick up.
Okay.
So that's a good sign, right? Because you need those entry level houses moving. But
Hmm.
yeah, interesting. I
Yeah.
wanted to share some stats because I was looking at some charts a little while ago, or actually last week I was looking at some charts that I wanted to share because I thought these were really fascinating. Like I know this on a conscious level, but I think a lot of times the public doesn't know it, and it kind of it's a really great graphic. So give me a second. I'm going to share my screen.
Sure, no problem.
Okay. This is actually like mind blowing when I look at
Oh
this.
yeah. Excited to see it. Yeah, I've also been here. I've been hearing that a lot of people are thinking like September, I think specifically on MLS is gonna be booming
I
quite a
think
bit.
so. I 100% agree. I really think the fall, this is going to be a very, very busy fall. I
Yeah.
really do. So, and I think there's a lot of people who are sitting on the fence waiting, but just look at this, like, look at these stats. This just blows me away. So, this is historical values in the Toronto real estate market. And I
Hmm.
think I get so many people who, say they're going to wait for the prices to drop. I'm going to wait for the prices to drop before I buy. You know, I can say without a doubt that anybody who's made a move when they decide it's time to make a move has won. And this will show that that is true. And those people who've always said, I'm going to wait for the market to drop, it, they're probably still renting. I'm sure.
Yeah.
Just,
Yeah, still
just
waiting.
they're still waiting for the market to drop. And the more you try to time the real estate market, the more you're going to lose out because you can't time it. By the time you realize what's going on, you've lost it. That's past data, right?
Yeah. And also I think people don't realize is when they say the market's gonna drop, like you'll see like little drops as you see here and there, right? But there's small drops. But for some reason, people don't take inflation into consideration and they don't realize that it's gonna drop like what it was 10, 15 years ago numbers, because we still have to take into consideration that inflation is still considered in the numbers. And so it may drop a little for a certain period of time, but it will never drop to like 10 years ago number or anything, because inflation still keeps things up. And I believe like that the housing market, to my understanding, is like the best investment even when it considered inflation, because it's always much above, like the year to year is always a lot higher. Like what you're making on a house is a lot
Yeah,
better than the inflation rate. So
right.
so even if there are some downs, yeah, it's not I think people for some reason think there's going to be like a huge like bubble that is going to be like boom and it's going to go to like zero or something, who knows. Right? And it's just
Yeah,
kind of like, because I mean there's lots of strategies even we do to get them to take care of like getting those deals, but we don't think about like the market's going to drop, like 100K overnight. But we have strategies, like we know, for example, November, December is usually a low time. So if someone's selling, for example, at that time, we're probably going to get a pretty good deal because there's a reason why they're selling, or same
yeah,
thing with quick sales. Like that's the purpose of the strategies behind things, at least in our perspective of real estate investors. There are opportunities out there, but I just think other people think that it's going to be like 100K drop or something in like in the night or something. I don't know.
yeah.
What do you think?
Yeah, well, I agree 100% with you. So what I see, like from an end user or even investors, I mean, if you're buying and holding, there's a lot of things to this. What I'd like to put together what I'm going to try to put together for our next stats one is a chart showing what happens when you buy at low interest rates like we have today versus higher interest rates. Because I think what the public doesn't understand is when for the prices to go down, the interest rates go up. So if you're paying 2%, and right now your chances are you're getting a mortgage under 2%. If you're buying a house for $800,000 and you have an interest rate of 2%, let's say you put 20% down, that's $160,000 down. So you're carrying a mortgage of $640,000. So let's say $640,000 at 1.9%. Or the price of that house comes down to, let's say, the absolute most a house will come down if there was some type of a crash, you have to think is 20% at the absolute most, which is, and I'll show you in a second why that's pretty much unheard of. But you have to think about, why do the banks loan 80% loan to value ratio? The reason the banks loan 80% loan to value ratio is because they know that the market is never going to drop more than 20%. They know that. That's why they'll loan up to 80%. And they've built a cushion in there. So they also know it's probably not even going to drop 10%, right? So let's say that $800,000 house, let's say it comes down by 10%, which is 80,000 at 720. Now you've got a mortgage of, instead of what's 720, the 72, what does that work out to? It's 100, a little more than 140. So you got a mortgage of about, sorry, what did I say? 720. You've got a mortgage of 20% down. My math isn't the great. Let's call it six. What would that be?
I'm not good with math in my head either.
I know. It's actually really bad, but it's because I'm used to using a calculator. So let's say 20% is 146,755.
I can do 500. I know like 20% of 500K is 100K. So usually your mortgage is 400,000 with 100K down payment.
Okay.
I just used those numbers because
let's
that's
call
I
it
feel like I see.
Okay, I did the calculations. Let's call it 575. Now you've got a mortgage of 575 at an interest rate of 4%. Your monthly payments are going to be higher than if you bought that house at 800,000 with a mortgage rate under 2%. Not to mention the fact the amount of interest you pay over time is going to be more. So over time, you're paying more for the house. It doesn't make any difference. You're still paying, you're paying it one way or the other, because you can't have your cake and eat it too. You can't have the market drop and the interest rates stay low. It's impossible. So that's what people don't understand, right? So if you look at these stats here, not to mention the fact buying a property is a forced savings, right? It's pretty much a forced savings because every month you're paying yourself. Part of what you're paying is interest, yes, but part of it is principal, bringing down your mortgage. The amount of equity you have in the house is lower. The amount of what the house is worth is higher because the price of the house is going up, right? So now you've got this forced savings, and that's why buying a house is so important. But if you look at this chart here, I mean, just look at this chart from 1975. This goes up to 2020. This is 2020 here, right? So if you look at the prices, the trajectory is always going to be higher, right? So if you look here, 1989, I got my real estate license in 1989, right here. This is where we had the biggest drop in house pricing in history. The prices dropped 20%, but it took a long time for them to drop 20%. They didn't drop overnight. The prices started going down. It took about 6 years for the market to bottom out and start to come back up. So, but look at what's happened over time. Now we've got 2017 here. 2017 we had a blip. 2017 we had the same blip, but see the prices keep coming up. 2007, that was the financial crisis in the United States here, but the prices have come back up. So this here is 2015, 2016. The other thing we have to keep in mind here is, this is sales. This is sales. This is average sale price. I'm looking at the wrong one. This is average sale price here. Yeah, sorry, that tipped me off because of that one. I knew it didn't jump that high. Sorry about that. Okay, so this is average sale price here. But look at this. Look at the average sale price. So 1989, like I said, 1989, the average sales price was $273, and the prices came down about 20% overall. But look how long it took. Look how long it took for the market to drop. It took 1991. It hit a low in 1996. Right? So it took 6 years for the market to drop 20%. It doesn't happen overnight. So the prices came up, but here in 1989, people were saying there is no way houses will ever be worth this much money. Never. They'll never be worth this much money again. Look what happened. Look where we are today. Average sales price of $929,000. Now this is all of the Toronto Real Estate Board. This takes in a wide range, but just look, like if you just look at these stats, it's crazy. Yeah. Like this is why you don't wait to buy real estate. You buy real estate and wait. That's why, right? Because look at these prices. Even this is 2017 when we thought the market was crazy. That first half of 2017. Oh, this market is crazy. Houses will never be worth this much money. Oh, what happened? Look where we are now. So you have to if you just look at this chart, like if anybody thinks this chart is going to start going down here, it's not going to happen. We may see a softening, which I don't see at all, only because the interest rates are low. Immigration starts to open up again. More people, there's a lot of buyers who trying to dropped out of the market because they didn't want to deal with multiple offers. But you can't think that those buyers are still sitting on the sidelines. So these graphs are just an incredible visual for me. I mean, this is all stuff I know in my brain because I've been selling real estate since 1989. So I've watched this play out, but other people don't understand that. And when they say, I'm going to wait for the market to drop, this is why investing in real estate is such a great idea, because the other thing we have to remember is when you buy a property, like I said earlier, you buy a house for $800,000 and put 20% down, that's $160,000. Whatever you make on that house, you're not making on $800,000. You're making it on $160,000. So when people do their numbers, you sell a house 2 years later and that house is appreciated by $100,000. You've now turned $160,000 into $260,000, not 800, right? You know what I'm saying?
Yeah, so they know exactly. Like people don't realize what return on investment means.
Right. Yes.
Like the return on investment, people always they think on the full house, and you think,
right.
Like even like, oh, I paid, $800,000 for this house, and it only went to, let's say, $850, right? But then it's like, how much of that actually did you invest, and
right.
how much did you make? And from there, what is your return of investment? Because it's always probably more than even what stocks. It is for sure more than what stocks provide.
For sure.
But it's just it's definitely making sure that you look at things in the right way. And I like that point that you made before about it's forced savings,
Yeah.
It's really interesting you say that because I kind of actually I did that to my husband actually. My husband is like a spender and he always wanted to get in the housing market, but he isn't very good at saving money. So we actually did this thing where like I paid for half the house in cash and he got to take care of the mortgage, and then so his half, so then because he's good at like paying his bills and stuff, but
Yeah.
he's just not good at saving big amounts of money. So he's always wanted to at least own something, right? And then so we did it in that way because like that, like he pays the bills and then now he's happy because he just sees his equity growing, growing, growing as he pays off the
Yeah.
mortgage.
Yeah.
I think that's a very good point because I basically did the same thing to my husband because he was just like, "How can I get in? How can I get in?" And just saving for some reason is just like not in his DNA.
Yes. Well, I mean, it is tough for some people, right? Because they don't see the long-term value of it. But I think when you look at this, like even for me, looking at this chart last week, I was just like, wow, like that is a crazy, crazy visual there, right? It's a crazy visual, so, but you're right. And it absolutely is a forced savings because you're paying your mortgage every month and you feel like, that money's coming right off the top. You pay it out and it's done, but you really are paying yourself every month because and especially with interest rates so low, like that's probably a really great call for us to do maybe in a couple of weeks, showing the impact of the interest rates, because that's, I know like the very first house that I ever bought, the interest rate at that time was 11.75%. And that was a good interest rate at that time because the first house I ever bought was in, what year was that? 89, would have been a couple of years after that, maybe. No, sorry, 1986.
Mm.
I bought my first house, and that, we paid the mortgage for a year, and then we'd look at our statement and be like, you've paid down like $2,000 on your house, and it'd be like, oh my God, this is crazy. But now it's completely flipped, right? So, that's this. I just can't stress it enough. Like when I look at this visual, it honestly blows me away. So I
Yeah.
think this
And
is
I
really
think like
good for
that
people to,
also, like being, because the other point that I was trying to make with what me and my husband did is like being creative, find
yes,
ways to get into the market because it will benefit you in the
yes,
end, like that, like I was just thinking like, how can I help him? What can we do? And like, this was a way that we could both win, So I think like, try to find a way to be creative and get into the market in whatever way you can because in the end, like you said, like it will go up and like that you'll have your forced savings, especially if you're the kind of person that can't save, like that.
yeah,
Like for example, my husband is just like not in his
yeah.
DNA. So we find creative ways to help him not see his money so he can't spend it.
So you know what? That's actually, that brings up something else. That brings up a thought of mine is like, sometimes people will say, I'm going to wait till I have more money down. Like you can buy a house with 5% down, right? If it's your first house, if it's an investment property or a second home, you can't. But the first house you buy can be with 5% down. So unless you think for some reason you're going to come into a large sum of money, I would buy it when you're ready to buy it, because the fact is, yes, you have to pay the land or the CMHC fee. However, that's like the price of the house going up over that amount of time is far going to outweigh what you paid in CMHC fees, right? So if you continue to try to save, if you're saving at a certain pace and you're continuing to try to save at that same pace, you can't save as fast as you can build equity, right?
Yeah.
So unless, like I say, you're expecting that you're going to come into a large sum of money, that's different. But most of us are not, let's face it.
No,
You can't
100%.
buy a house conditional on winning the lottery, right? Maybe that's what I'll do. But so you know what I'm saying? If you're saving and you're trying to save and it's going to take you 2 or 3 years to save that money, buy the house today with 5% down, pay the CMHC fee, and you'll see that the equity is far, far, far going to outweigh whatever you've paid in CMHC fees. That's a good way to get into the market, and you're building equity, right? You're building equity at the same time you're paying yourself every month. So it's a really good way to look at it. But I love what you guys did, because that's, I think you and I talk about this a lot, about being creative and finding ways to get into the market. And, I hear people, young people all the time say, how am I ever going to be able to buy a house? You got to be creative. If you're living at home and you're happy living at home and, you know, whatever, it's going well, and especially if you're not paying anything or you're paying very little, buy an investment property somewhere out of town, a condo, whatever it is that you can afford at this point, rent it out. You're building equity. You're getting a return on your investment every month. Keep it for a year or two, save more money, sell that property, and take whatever you've saved in the next couple of years, plus the equity from that property, and you can buy whatever you want. Or better still, that could be the start of your investment career. Keep that property, remortgage it, leverage it, take the equity out of that property, and go buy the house you want. Then now you're starting to create some wealth with real estate. There's so many ways to do it, but we get hung up in this, you know, I want to buy a detached house with a yard, and I want to have the dog, and I want to have this, and I want to have that. Then you're just never going to be able to buy.
Yeah.
So,
or they get stuck in like the money mindset, right? I never have money. I'm always broke. You know,
yes,
where
yes,
like, which is, I think, I guess for in real estate investing, like that gets broken down a lot because, I mean, the way a lot of us buy a lot of houses is we're not because we have money always, right?
yes,
Once we hit our caps, now again, we're being creative to find other ways to find money, make partnerships like that. Like there's
yes,
so many approaches. And I think another thing that you said that was good is maybe making your first house instead of a house that you're going to live in, making it an investment property, because at least in that way the tenants are paying for your mortgage and your bills, and then like that, then maybe the second one becomes the prime, the house that you want to live in, because
yeah,
it's very true. That's something I noticed with my first house to my second house. I noticed that, mm, I believe, if not all, majority of the money came from my first house that paid my second house. I believe all of
right,
it paid from my,
yes,
because like that, I can't save that much money fast.
that's
And
right,
it
yes.
was just that my house increased so much in value, and I was like, yo, I'm taking that out and putting it into the
Yeah.
other house.
Yeah, there's so many ways to do it. I'm just launching right now um, a module to teach people how to buy pre-construction condos and how to make money in pre-construction condos. So if you're, you know, there's a great opportunity there. If you're a young person and you have the money, you have some money saved already, but not enough, we can teach you how to buy a pre-construction condo, because you're not putting that full amount down. You're spacing out that amount that you're putting down, and then in 4 or 5 years when you're ready to move, you've built all this equity in that property, and then you can sell it at that point. But putting it in the bank, you're not even hitting inflation when you've got your money sitting in the bank. There's so many ways to do it, right? Like a young person who's got some income, has a decent job, has some income coming in, like talking about your husband, like if you were to take a chunk of that money, put it down, and then you have to put more or whatever over time, and then you've got this condo that you can sell or rent out, whatever it is you want to do. Or people who have a lot of equity in their home, a paid off house is not doing you any favors. Like if you read Rich Dad Poor Dad, he talks about your primary residence is not an asset, it's a liability if you're not doing anything with it. But if you're sitting there and that house is paid off, yeah, that's a liability. It doesn't make any
Go
sense.
buy another house, go private lend all that money out, do something with it.
Yeah,
You have so
there's
much
so
equity.
many things you can do. There's pre-construction, there's REITs, there's private lending, there's investment properties, whatever it is that you want to do. There's so much opportunity there. So there's just
Another point that I wanted to say about the pre-construction that I thought was really good that you said also was, when you do a pre-construction, and like you said, you have these term deposits they have to pay, and then at the end is when you have to, get finally apply for the mortgage and everything.
yeah,
Also, I feel like the good thing about that is you have a goal to work for, which helps you get there, right? Because for example,
yes,
okay, I need $5,000 for this month. You probably already have that saved, or maybe even 10,000. But then now, okay, by this time I have this much money, so you're already working towards something that makes it a lot easier for you, instead of always waiting on the sidelines. I'm going to wait until I have all this much money
yeah,
and then I'll do it. Especially if you're like a person like my husband that just like, you just for some reason, like saving money just doesn't come in your DNA. It's
yeah,
like, at least, most people will have at least, let's say 5,000 or $10,000, or at least if you're seeing the pre-constructions coming up, you're starting to like, okay, let me start saving that money. It's obviously a lot easier to do 5,000, 10,000 than it is to do like 80K or 100K.
Yes, yeah, for sure, yeah, 100%. Yeah, it makes a lot of sense. So I think there's so much opportunity out there, and then just looking at those stats, like looking at the numbers and what real estate does over time is crazy to me. So I that's why I'm so, I'm passionate about people buying real estate, and love especially helping younger people buy real estate, because I know that's the way you're going to create that wealth for yourself, or that stability for yourself. Because I think a lot of times when you're young, you feel like you're going to work forever, but at some point you may not want to. You may want to retire at 35. You may want to retire at 50, whatever, and just do something that you love doing. So it makes a big
And it can
difference.
be like small little things, like it can give you freedoms that you didn't know you had. Like that, if you have like a couple rental properties, that could cover like your expenses too. And now, now let's say the money you're making at work can at least be more money for
Right.
vacations, more money for your hobbies, more money for other things that you rather have. Or instead of working 5 days a week, now you're working four just because you
Yeah.
rather have a 3-day weekend instead. So it's just all these things kind of give you more freedoms to do the things that you want to do.
Yeah, that's true. That's a really good point. It gives you options, right? Like options, it's never bad to have options, I think. I mean, if you have options, it's always great. You could be in a job and in a career that you realize at some point, I don't really like this career. I don't really want to do this. I want to go back to school and learn something else, or, or just go out and do something else. It gives you that freedom to be able to do that. So, yeah,
Exactly. Yeah. It's just you have more decisions when at least your basic expenses are taken care of, because a
yeah,
lot of people don't realize that, they're controlled by their bills. The bills really control them. When you have this, I have to pay these bills all the time.
yeah,
It does control you to a certain extent. You can't be like, let's say with me, like I'll be like, hey, I'm gonna disappear for a month vacation. A lot of people think that's very crazy that I do that, and I'm just kind of like, I just because I can, and I've given myself these freedoms that I can just disappear for a month on a vacation, and it's
yeah.
not gonna give me any kind of problems like other people. They'd be like, oh my god, like I would need to probably save for I don't know how many months and do this and this and that. And
Yeah, yeah. That's amazing. So that's what we're talking about, right? The options. You have options all the time, which I think is great. So that's why I like this. So what do you like? I guess in terms of younger people, because you have a network of people who are investors, and what do you think the biggest drawback is to anyone who wants to get into investing?
that they
What do you
think
see?
they need money. That's usually what it is. They think they need money. It's one of two things, right? Like usually people have there's people that have a lot of money, no time. There's people that have no money and a lot of time,
Yeah,
right? So it's like leveraging where you're at the time, right? If you have a lot of time but no money, then that would be a great opportunity to start learning skills, for example, related to real estate investing, where you can because where you can be involved, even get a percentage of the profits for maybe your free labor, or maybe for example the first one maybe you'll be maybe working more for free but you're learning, but then maybe the next one, because now you have a little bit more experience, then you're given more skills where then you can get a percentage off it, right? But then you've put no money in, but you've put your time.
right.
Same thing, there's a lot of people that I don't have the time or even care to deal with tenants or deal with
Yeah,
buying a house or whatever, but they
yeah.
have a lot of money and they're like, here, take my money and make me money.
Yeah, yeah. And there's lots of ways to do that, right? I mean, we've talked about that earlier with, things like private lending, real
Private.
estate REITs are great. I think, if you don't want to be active in it, or you don't want to have tenants, pre-construction is good if you don't want to deal with tenants. There's a lot of different ways around it. If you're buying a house long-term to hold, then I don't see an issue with having a tenant in there. If you get a good tenant, and the majority of tenants are good and will stay for a long time. So having a tenant is great. If you're looking to flip it quickly, probably not your best choice at that point,
Oh, okay.
because you
That's
can't get
like
the
a full
tenants
time
out. But
job.
yeah, so it depends what you're going to do with it. But if it's a buy and hold and you want to hold on to it long term, yeah, nothing wrong with that for sure.
Yeah. And yeah, I think knowing yourself is important, because I started noticing this recently actually, some people, some landlords complaining about their tenants.
Yeah.
And then I go and, usually in groups, you can see all the conversations or all the different questions they've asked.
Yeah.
One of them, for example, has almost always had problems with tenants. And then it kind of led me to think, like, are you the problem?
Yes. Yes. Yeah.
I'm like, because at least with me, I mean, I've never had tenant issues. I mean, I've had in the sense of like where I need to get rid of a tenant, like we'll have like, oh, for example, a few days ago, the internet's going down and we had to call the internet provider, like these little issues don't matter. But this person, like every single time, is
Yeah.
talking about wanting to evict someone. And I'm just like, my God, I think you may be the issue,
Yeah.
and I feel like I feel like negatives attract negatives, positive attract positives.
Well, it does, right? I mean, it totally does. So that's our mindset call for sure,
Yeah.
negative versus positive. But that's a good point. If you're having problems with every tenant, it's one of two things. You're either not vetting them properly, you're maybe not charging enough, or you're a problem. You are the problem. So, I mean, I'm sad to say the reason that the tenant laws have swung so far, to the one end in terms of the tenant, is because there were problems with landlords. Now it's gone way too far, but there's a lot of other ways. There's short-term rentals that you can do if you don't want a long-term tenant in your house. There's short-term rentals that you can do furnished, where you're typically getting more money for the property. There's lots of ways around everything. You just have to figure out what's your goal in the investing realm, right? What is it that you want to do? Do you want to be hands-on? Do you have time to renovate a house? Do you have time to go, change light bulbs, fix the washing machine, or whatever little things like that? Do you have time to do that? If you're not the type of person who wants to deal with tenants like that level, then don't buy a house and do it that way. Do it a different way. You can do
or you can be completely passive and just let those checks come in on their own.
Yes.
Let someone else deal with the headaches of other things.
Exactly, right? There's always property managers for sure. So there's lots of ways to do it. I think it's interesting. So I want to just talk a little bit. Actually, I'll take this opportunity if I can. I'm going to talk a little bit about a program that we're developing for people who are getting into pre-construction and learning how to buy pre-construction, what to buy. Like there's a lot of different things that you want to look out for, right? Because you don't want to be, I mean, my inbox is jammed every day with offers, from real estate agents of this condo coming up and this pre-construction. Well, I want to know what are the very best projects. And by that, I mean, who's the builder, because some builders are better than others. What are the best projects? What are we're looking for the unicorns. I don't want to just throw out every new project that comes up to my database and say, here, and if you're interested, call me. I want to find the great projects. So that's what we're building out, is how do you find those? How do you control? How do you manage, how do you deal with like keeping it's gone totally out of my mind. It'll come back to it, but how do you buy pre-construction and make money? What are you looking for? How do you protect your investment? That's what I was looking for. How do you protect your investment? How do you protect your return on investment? Because that's also important too, right? You have a certain amount that you want to make. How do you protect that? How do you protect all of these things? That's what we're building out. So that's going to be coming up. I have a couple of webinars coming up in 2 weeks, one during the day and one in the evening for people who are interested to learn how to buy pre-construction. So that's coming up soon, which I'll talk maybe a little bit about that again on our call next week. But next week we're talking about specific types of
real estate strategies and things like that. Yeah.
Okay, so buy and hold, burrs, flips, different things like that. I think the flips are getting a little bit more. We'll talk about it next week, but a little more difficult if you want to be in Toronto. That's getting to be a little bit more, but there's always a market for people to buy a house. I mean, I always say there's two types of houses that people want right now. One is either the house that's completely finished, turnkey, move in, sweep the floors, put your furniture in, Bob's your uncle, or completely renovate. There's not a huge market for the in-between houses. So that's where the opportunity is as well, right? People want the house that's either completely finished, like don't just do the kitchen and not the bathrooms and everything else, because that's not going to get you a good return on your investment. You've either got to do everything or do nothing, because somebody might come in and want to redo everything anyway, and then, you've kind of, it's a waste of that money. So that's basically what I see from, from the real estate market, from working with buyers.
What's interesting, you said that actually about Toronto, because our realtor is already planning our next buy for flips, and it's not in Toronto. He's like, so it's funny you say that, because I guess, yeah. And that's also, I feel like an important thing to remember is that not all the markets, for example, drop at the same time or go up at the same time. Every single, like, certain hubs of different markets are always going, up or down, and they're not always following what everyone else is doing, which I think is also important for people to know. Because I think, like, because I noticed, for example, like a lot of, like, especially in the news, they kind of like really generalize things a lot, and then they think like, oh my God, the whole housing market has gone down. But then us as real estate investors or realtors, we know that that's not true. It's just certain areas are being affected, and then that means we're like moving into other areas.
Yeah, except that now I think might be a bit of an anomaly, because I think everywhere in Canada is up. I'm pretty sure even like Calgary is going up at this point, which was going down, but the whole, Sudbury, Timmins, Sault Ste. Marie, Ottawa, pretty much everywhere. I think even the East Coast is inching upwards. So I think all of Canada stats are up all over Canada, which is a bit of an anomaly.
Sure. No, that's for sure. But they're, for example, going up at different rates. Right?
Sure, absolutely.
There's differences, like, in that sense. There's always differences between the different markets. They may all be going up, or they may all go up, but they're still going up at different rates.
Yeah, for sure. That's a good point.
Stabilize, kind of thing.
Okay, so we'll talk a little bit about what's coming up next. So next week we're talking about different types of investments. Like I said, buy and hold. I think we could probably talk a little bit about maybe some other things, like, just vacation properties, things like that, different ways of buying real estate. So that'll be next week, and then the week after will be kind of miscellaneous. I'm going to try to put together I'm going to try to put together a chart showing the differences in interest rates. Like if you bought the same price house or whatever difference, I want to put a visual together, because I don't know if people are like me, like, like I said, I knew that chart already because I've been in the real estate industry so long, but when I saw it like that, it just was like, whoa, this is absolutely crazy, right?
Yeah, we could do that for the next week, or maybe cottages also, because I know whole summer cottages has also been very big.
Yeah.
Here, cottages have been huge, so it'd be interesting to see, even to talk about, how the cottages are going.
Yeah, amazing. So for anybody watching, if you're interested in becoming an investor or just have questions about investing, Diana has a group, and she connects, she connects people who are in that investment realm. And I think it's a great opportunity for people, if they want to reach out to you and learn about investing. What does it take? What do I need? Is this right for me? It's not right for everybody, of course, but is this right for me? But I would say if you're thinking about it, it's probably right for you, because you wouldn't get that idea if you weren't capable of doing it. So people can reach out to Diana and pick her brain a little bit about it. I can also help with that. I'm an investor as well, but also on the resale side for people buying or selling houses. That's what we're here for, of course. And getting your house sold quickly, all those kind of things. There's a number of ways to do that. You can sell it to an investor. I can get it sold quickly for you, whatever. We can work on all that. But if you have any questions for me or for Diana, reach out. You can direct message us here, or you can call us. We'll put it in the profile there. You can call us, or I won't put the email. Direct message or call would be great, or text, whatever. That would be awesome. So, okay. Anything else you wanted to say, Diana?
No, I think I'm good for now. I have something I want to say, but I think I'm going to leave it for your next stats.
Are you? Okay.
Next week that you said you're going to do a presentation.
Okay, sounds good. Okay, awesome. Thanks. Always a pleasure.
Yeah, thank you, Sandy. Thank you, everyone. Hope you guys enjoyed.
Thanks. Bye.
Bye.